Now, before we get into the local markets, just taking a look at global markets and how they've been reacting to the Q3 earnings results that have come out so far, especially from the likes of key banks like Bank of America and JP Chase. In your point of view, from your point of view, are we on the road to recovery? Are there those real signs of a turnaround that investors have been looking for?
I think we're definitely on the road to recovery. The third quarter results are coming out fairly mixed at this stage. The second quarter results surprised on the upside. In America, they're surprised by a ratio of 3.6 to 1. In Europe, 1.4 to 1. That was obviously second quarter. So we're watching third quarter quite closely. But I think the message to take away from it is that analysts were overly pessimistic, particularly in the second quarter. They're getting more of an idea of where things are going now, so they'll probably be a bit more accurate this time. But I think still surprising on the upside, but certainly I think starting to get a bit tired now. The markets have had a tremendous recovery. They've come back a lot stronger than people expected, but at some stage they've got to slow down a bit in order to let earnings catch up.
Now, the Dow is currently trading just shy of 10,000 points, but it did breach that mark this week. What significance should be attached to the Dow breaching this mark?
I think it helps from a confidence level, but I think you're going to see different parts of the world recovering at different speeds. Certainly the Asians are going, and the emerging markets are going to be growing faster than the Americans, faster than the Europeans, faster than the Brits. And you're going to see the money following the growth. You've already seen the stock markets in those parts of the world recovering a lot faster. You've seen a massive switch out of the low-yielding West into the higher growth Rest as money follows yield. And there's still a wall of money that's going to be filtering into markets. It's trying to get an opportunity to go into the market. So I think that'll cap any downside if you do see a 10 to 15, maybe even 20% blow-off, which is not unlikely at this stage.
Now, talking about money following yields, if you look at the JSE's figures out yesterday, it shows that equities have surged 25% in the year to September. We've also had a strong foreign appetite for South African assets, with investors buying around a net foreign investment of around 63 billion rand in South African equities, a huge turnaround from the large outflow from last year. Now, what do these numbers show about generally how the South African bourse has performed, is going to perform in the coming months?
Sure, these numbers show exactly that the money is following the growth. You've seen huge money flowing into emerging markets, and you've seen emerging markets perform very strongly from the bottom. But some of these emerging markets are now starting to run ahead of themselves. The South African equity market being one. I think, if I'm not wrong, that it's the long-term price equity ratio is now above its historical average. So I think certain of the markets are going to have to slow down a bit, go sideways for a while in order, as they wait for the rest of the world to catch up. The developed world, for instance, has not run nearly as fast as the emerging markets. So if we were back in March, that would have been the time to get into emerging markets. Now you've got to be a bit more careful where you put your money, given that emerging markets have to an extent run a lot already.
So if markets are tired at the moment and you've got to be careful about where you put your money, then what should you be doing if you do have a little bit of money on the sidelines?
Well, I think it depends on your outlook, your time horizon. If you're looking from a 6-month perspective, you need to be nervous of going into the market at current levels, because it may be below where it is now in 6 months' time. If you're looking on a 2 to 3 year basis, I think you can still make money out of the local market and international markets. The question is, are we going in, is this a V-shaped recovery, or are we going to plunge again next year? I think both are probably wrong. I don't think it's a V-shaped recovery, because in order to get back to where we were, you would need lots of available credit. You would need people to be spending freely, which they're not doing. So I think we're probably going to go halfway up the recovery of the V and then sideways, as opposed to plunging down for a while. And in that sort of environment, it's good for stock pickers. A good stock picker can make money out of a market that's going sideways.
And how would you advise picking your stocks?
It's all got to depend, but it will depend on what the current environment favors, because certain industries will do well and certain industries will be bad. Within each sector, certain companies will do better than others as people's spending patterns changes. For instance, people are spending down. They're going from the top-priced trader down to the lower-priced traders. So people's spending patterns have changed. So one's got to be on top of all of those things in order to work out which sectors and then which companies are going to perform well.